I think we're still in a crypto winter. The 2.5 event was shocking, but I'm not sure it was the final cathartic bottom. I think we're in a bottoming phase. Look, I think we're going to get out of it this year, but we're still in the depths of it. There are often one or two big shakeouts, so I wouldn't be shocked to see another event like that at some point in the future. October is the obvious one, right? Because that's when Bitcoin itself peaked. And you had 1010 and it's down 50% since then. So the easy way to say when the winter started is to point to that. But if you look at the underlying data, there's a funny thing that's happening, which is outside of Bitcoin and ETH, really, everything else in crypto got crushed, basically starting with the Trump inauguration in January. Paper Bitcoin thesis is just mathematically untrue. The idea that like BlackRock or someone is manipulating the price of Bitcoin is unequivocally untrue. But will the world, in a real multipolar world, want a non-political currency to settle transactions? I don't think that's far-fetched.
Something is quietly breaking in the crypto market, and most people are not paying attention. For years, Bitcoin carried a simple promise. It was digital gold, a hedge against a world drowning in debt, money printing, and currency debasement. That story made sense. It still makes sense on paper, but the past year exposed a painful gap between the narrative and reality. Gold went on an extraordinary run. Prices climbed to historic levels while Bitcoin sat behind, underperforming the very asset it was supposed to replace. That comparison stings, and it raises a question that serious investors are now asking out loud. Is the digital gold thesis broken, or did Bitcoin get caught on the wrong side of a trade it had nothing to do with? The honest answer is more complicated than either the bulls or the bears want to admit. Bitcoin did not fail, but it missed a move that was driven by a force it could not access. Central banks started hoarding physical gold after the US seized Russia's reserves, which exhausted the supply and sent prices vertical. Bitcoin was never going to catch that bid. Central banks are not buying Bitcoin yet. Matt Hougan, CIO of Bitwise, in his latest interview breaks down exactly what happened. He says we are still inside a crypto winter. Retail and institutions are now moving on completely different timelines, and Bitcoin is carrying two silent risks that the community is not taking seriously enough. Let's hear from him.
I think we're still in a crypto winter. The 2.5 event was shocking, but I'm not sure it was the final cathartic bottom. I think we're in a bottoming phase. Look, I think we're going to get out of it this year, but we're still in the depths of it. There are often one or two big shakeouts, so I wouldn't be shocked to see another event like that at some point in the future. Yeah, October is the obvious one, right? Because that's when Bitcoin itself peaked. And you had 1010 and it's down 50% since then. So the easy way to say when the winter started is to point to that. But if you look at the underlying data, there's a funny thing that's happening, which is outside of Bitcoin and ETH, really, everything else in crypto got crushed, basically starting with the Trump inauguration in January. So big L1s like Sui and Aptos and Avalanche were down 70% plus in 2025. And if you plot them on the chart, they started going down in January and they just went straight down. And if you remember back in the summer or early fall of 2025, we all talked about this weird dichotomy in crypto, how institutional investors were really bullish, but crypto retail was really bearish. And you had fear and greed already at low levels. It then fell to the lowest time ever. And I think what was happening was there was a crypto winter for retail OG crypto investors. And then institutions were bullish and they were papering that over in the assets that they could get exposure to. They were papering it over in Bitcoin, papering it over in ETH. And so I think the crypto retail winter started in January and we're well into that, right? We're about as long as those winters typically go. I think institutions just sort of caught on in October. And they're moving at a different cycle. They're almost like two seasons. And I suspect crypto retail gets out of it soon. I think there are even some green shoots suggesting that may be happening. And I think institutions hopefully figure that out. But yeah, I think we could be out of this in Q2 or over the summer. I wouldn't be surprised to see the winter end on that kind of time frame. Well, there are lots of implications for that. Like one is that crypto should be less volatile than it was in the past and should have shorter or smaller drawdowns than it did in the past, right? So not 75, 80%, but maybe 50, 55, 60%, which would suggest we're nearer to the bottom. That's because you'll have some people buying while some people are selling, right? And the same thing was true last year, right? Absent the institutional flows, I think Bitcoin would not have been -6, it would have been -60. So already we compressed that volatility, and I think that will continue. So lower, less volatile assets. It also means there'll be this on the run, off the run phenomenon where assets that institutions are investing into will perform differently than assets that they're not. So what's a good example of that? Over the last week or so, we've seen BlackRock invest in Uniswap. We've seen Apollo invest in Morpho. I've seen more interest in DeFi from my institutional clients. Could it be that DeFi leads us out of this winter because it's getting that institutional flow and institutional interest? I think you might see that sort of dynamic as well. So keeping in your mind this sort of two-part structure, I think is probably going to be important to thinking about how crypto performs, broadly over the next, well, I guess forever. Right? This is the new reality we're in. I would say that the issue with what you're pointing out was it actually wasn't a debasement trade. It got positioned as a debasement trade, but what it was a central bank self-custody phase that turned into momentum market. So in other words, what drove the price of gold up was actually central bank buying. It jumped up after the Russia-Ukraine invasion when the US seized Russia's treasury assets. And all of a sudden, central banks needed a way to gain exposure to the market outside of fiat currencies. They started buying gold. They persisted buying gold in 22, 23, 24, and eventually they exhausted supply and the price skyrocketed to the moon. But I don't think it was a debasement trade. I don't think people suddenly started freaking out about debasement. Debasement is sort of a boil the frog phenomenon. Incrementally, people get more worried about that. And incrementally, they gain exposure to hedges. And I think that's still happening. And I think Bitcoin is catching that bit, right? We're still up substantially since COVID. We're up substantially over the last 3 years. I think that's intact. I think what caught people by surprise is they have like one vision of what can drive the gold market, and everything should follow along. And in this case, it was just a force that didn't apply to Bitcoin, right? Central banks are not buying Bitcoin. We want them to, but they're not. So I don't think it was a debasement trade. I think ultimately Bitcoin will serve as digital gold because its fundamental characteristics fit that environment. And I think it'll do just fine. It just suffered from, it had a negative 4-year cycle effect. At the same time, gold had this self-custody for central banks bull market. And so it looks bad on the chart. Over time, we'll catch right back up. So like the paper Bitcoin thesis is just mathematically untrue. The idea that like BlackRock or someone is manipulating the price of Bitcoin is unequivocally untrue. But then there are things that are probably true. In fact, there are things that we know are true, right? So in 1010, we know of a few small crypto hedge funds that had to cease operations and unwind. They were tiny, but I know who they are. It's not like private information. And if a few small crypto hedge funds had to unwind, it's very possible that a few larger crypto hedge funds are still unwinding. It's very possible that some macro hedge funds are still unwinding. It's possible that there's more than just block fills, which ran into issues and had to freeze withdrawals. All of that is true. The thing to consider when I say that is that's like, maybe it's 10% of the driver of what's happening in the market. It's not 100%. So the problem with these conspiracy theories is like people say it's an unwind by a hedge fund. No, it's that OGs are selling. It's that people are afraid of Kevin Warsh. It's quantum risk. It's all of these factors. This definitely has happened, but it only explains a little bit of it. And then the other stuff like paper Bitcoin or gross manipulation by large financial services companies, that is just a dark place where investors go to die because those things are just untrue. Point and period. But this hedge fund unwind is true. It's just not the only driver of what's happening in the market. My guess is he's going to cut rates more than people expect. And as the market realizes that now, that's going to be a bullish catalyst for the market. So I think him coming into the chairmanship or being confirmed is actually going to be one of those factors that starts to pull us out. But look, it was a fair reaction given that we had the possibility of a very aggressive Fed chair, which would have sent Bitcoin much higher. And we didn't get that. So I think that's what the market priced in. But again, right now, it's going to be a bullish catalyst because he's more dovish than people think.
Hougan's market read is blunt. We are still inside a crypto winter, and the crash earlier this year was not the final bottom. He believes the market is in a bottoming phase, but more shakeouts can still come before it is over. What makes this cycle unusual is that retail and institutions no longer move in step. Retail crypto investors started bleeding quietly in January, while institutions were still buying Bitcoin and Ethereum, masking the damage beneath the surface. By October, institutions caught on too. Now both groups are hurting, but they entered at different times, and they may exit at different times as well. That split carries real meaning. It means Bitcoin's drawdowns should compress compared to previous cycles because institutional buyers absorb some of the selling pressure. It also means different assets will recover at different speeds, depending on where institutional money flows next. Hougan points specifically to DeFi, noting that fresh institutional interest in that corner could make it the first sector to recover. But beneath all of that sit two risks. Hougan says, Bitcoin cannot afford to sleep on. The quantum narrative is already stalling institutional buyers inside investment committees. And the security budget problem, thin fees, almost no on-chain activity, is the kind of quiet concern that has a history of becoming a very loud one.
Elon came in trying to cut spending and basically gave up and said our only hope is to grow out of it, right? So yeah, as Lynn Alden says, nothing stops that train. We're spending money, we're printing money, we have a huge amount of debt. There's just no way off that train. And I think Warsh will try his best because he does believe the Fed should be more narrow, but he's going to be constrained by how the market responds to that. When you have like a financial advisor or a large institutional group deciding whether to invest in Bitcoin, there's typically an investment committee, which is like 6 folks who sit around and debate things. And the reason quantum is a challenge is not because I think it's something the Bitcoin community can't and won't eventually solve, which I do think that is the case. It's that when you're in this investment committee and you have 6 people, there's one person who says, yeah, but what about quantum risk? And maybe they've read what Nick Carter is writing. Maybe they've read what Willy Woo is writing. Maybe they've studied the issue. And if your answer is like, yes, let me tell you about the technicals of this and what portion it and how the community will rally together, even though there's no Bitcoin corporation, and eventually solve it and make these hard decisions about, quantum exposed wallets, you've lost, right? Like what you need is like, no, that's not a risk. Actually, your bank account is at risk and Bitcoin will be fine. And we haven't had that because the community hasn't had like a focused vision on that. So I do think I don't believe those charts either. I think that's nonsense. But I do think it's holding back what would otherwise be a recovery because some of the dip buyers are using that as an excuse not to come into the market. There's certainly some parts of the Bitcoin development community that has taken this seriously. But I do think there was a large group that sort of thought that this is something we can deal with down the road when the technical solutions to deal with it have improved and are more tested. And if we try to resolve this problem right now, we might do more harm than good. And that was maybe even correct. I'm not an expert on quantum, so I don't know when it will be an imminent threat, but I can believe that a reasonable person thought this threat is far enough down the field that we shouldn't focus on it now because we'll have better solutions to it as we get closer. That's like a rational. The point where that becomes irrational for price is when this narrative takes hold. So it sort of sucks that sometimes narrative can dominate reality. But I think that's what's happened here. Well, at least the people who think it's urgent and pressing, who may be right, because again, I'm not an expert, have become loud enough that now Bitcoin Core needs to respond. That's sort of my view. It's almost self-reinforcing. So the other narrative, which I always describe to institutional investors as sort of a slightly out of the money call option, is that we're moving into a multipolar world where people are weaponizing their currencies. It's easy to imagine that in that world, in 5 years, in 10 years, maybe in 3 years, a portion of the world will want a apolitical currency to settle transactions in. And we've seen sort of small efforts at this, right, between like Russia and China and others. I think that that is a major use case. So a lot of people are like, when am I going to buy coffee with Bitcoin? Basically never, at least in the US, because the tax treatment sucks and existing payment rails are super easy. But will the world, in a real multipolar world, want a non-political currency to settle transactions? I don't think that's far-fetched. It's certainly not far-fetched if you imagine yourself going back 10 years in time to 2016 in Bitcoin and asking yourself, will the Harvard Endowment and the Abu Dhabi Sovereign Wealth Fund have large positions in Bitcoin? That seemed absurd. It actually seems easier for me to go 10 years forward and imagine the world settling a significant number of transactions in an apolitical currency. And Bitcoin is the only one that you can do that, because unlike gold, you retain custody of Bitcoin through settlement. And that's like a huge differentiating factor. So yeah, I think that's the second real narrative to me for Bitcoin. There may be others, but those are sort of like store of value, apolitical currency for international transactions seem the obvious ones to me. They might use stable coins, they might use DeFi rails, some of them might use Bitcoin, but all of them are more likely to use crypto than not. And I think actually everything that happens in crypto outside of scams benefits Bitcoin for what it's worth. So growth of stable coins, I think, benefits Bitcoin because it puts you in the neighborhood. You need a wallet. A wallet is proximate to Bitcoin. You can hold it direct. I think it's positive. The way I would imagine the AI-fi story, if you know that classic tech chart of like it goes up and then you go into the trial of disillusionment and then the phase of enlightenment or whatever the terms are, we're in that first up on AI-fi. So we're in like the initial hype bubble. For sure, we're going to go into the trough of disillusionment at some point because it's going to take a while for this to reach scale. But I think the reason I would pay attention to it is A, it would be nice to have a narrative to push us out of the bear market. And this is one of them. And long term, I think it's extraordinarily true and actually has big implications because I think it means transaction activity is like 1,000 times bigger than we think. A DeFi is like 1,000 times bigger than we think. And for sure, if you just abstract, like, is an AI agent going to be more open to Bitcoin than the average human? Yes. Right? Like apolitical, digital, verifiable, limited. It's easy to see that being a part of the market. And so I'm bullish on it, but this is a long-term play.
Bitcoin's biggest problem right now is not price. It is narrative drift. The digital gold story remains intact as a long-term thesis, but in the short term, Bitcoin got lapped by the real thing. And the reason matters deeply. Gold surged because central banks needed a self-custody asset outside dollar-denominated systems after Russia's reserves were frozen overnight. That fear was real and immediate. Central banks responded by buying gold relentlessly through 2022, 2023, and 2024 until supply tightened and prices exploded. Bitcoin could not participate in that trade because central banks are not buying Bitcoin. Not yet. Hougan is clear that he believes they eventually will. Bitwise had 4 meetings with central banks last year, specifically about Bitcoin. The interest is building, but central banks operate on a timeline measured in decades, not market cycles. That wave is coming, but it will not rescue this bear market. What could pull things out sooner is something closer. Hougan points to the Federal Reserve's new chair and the expectation that rate cuts will arrive sooner and more aggressively than the market currently expects. He also points to the AI narrative, still early and overhyped in the short term, but carrying serious long-term weight. AI agents operating without bank accounts and settling transactions without human approval naturally lean toward apolitical, verifiable, borderless money. Bitcoin fits that profile better than anything else. but the two risks Hougan raises are the ones that should worry Bitcoin holders most right now. The quantum computing narrative is not necessarily a real technical threat today, but it has already taken hold inside institutional investment committees. When one person in a room raises the quantum question and there is no clean, simple answer ready, deals stall and buyers walk. The Bitcoin community's slow and dismissive response to that narrative is costing the market real money right now. The security budget risk follows the same pattern. Transaction fees are almost nothing. On-chain activity is thin. Bitcoin escapes serious scrutiny today because the store of value framing does not require revenue the way other crypto assets do. The debasement trade is still running slowly in the background. The next wave of buyers, from sovereign wealth funds to eventually central banks, is still forming on the horizon, and Bitcoin is still up massively from where it was before any of this began. But this is a fragile moment, and the narratives that have been holding Bitcoin up are being tested right now. So the question is, Bitcoin has survived every crash before this one. But with quantum fears growing and fees near zero, do you think this is the silent threat that finally breaks the digital gold story? Thanks for watching. Please don't forget to like and subscribe.